Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Thursday, June 21st, 2017. Well, markets are seeing a little bit of sell-side action today. Interesting today because the 20 moving average potentially could get closed below. Granted, we need to see confirmation for it to turn into anything bigger, but considering we're literally days away from the beginning of the cycle period, you have to think this is all tied to it. Really, the action over the last week or so is likely tied to the beginning of the cycle period. And again, we'll be watching that very closely. The cycle period, again, lasts from essentially next week through August 15th. I expect accelerated price movement, higher VIX averaging over 15 for that period. And again, we should see the markets overall see quite a bit of downside, although there are going to be big bounces too. There's the buy the dip mentality back in force. Now, in this video, I need to show you something. This is something that every investor needs to be aware of. It's a basic way for the institutions to take your money, and it can best be seen on the intraday chart. So basically what we've seen since last Friday, so a week today, as of today, a week in total, is the market selling off early or gapping lower, sometimes both, and then rallying up. And again, you've done this basically every single day. Friday of last week, sold off, floated higher. Monday, gap down, floated higher. Tuesday, gap down, sold off, floated higher. Yesterday, a little bit of a change in character in that we opened higher, but you still got the same sell-off and then the float higher. Now, today, it looked like a repeat performance. Market opening basically flat to lower and a big sell-off, and then look at the bounce you got. Same exact time frame. The time frame here matches the exact time frame of the low yesterday, the exact time frame of the low the day before. The prior day, not so much, but the day before that, the same thing exactly. So basically, my point is this. There's something you must understand. And many investors look at this and say, well, I'll just buy the dip. And the problem is they're looking at it too many days later. So basically they're looking at it today and saying, wow, it happened so many days in a row. What the heck? Today's dip, I'm going to buy right here. And it looks like it's working out. But the problem is the institutions have paid billions of dollars for computer programs that can predict. I mean, these are AI programs, folks. I mean, these are so smart. And what they know and what the institutions understand is that human psychology, and by the way, they pay psychologists millions of dollars a year to understand this as well. Human psychology is eventually to pick up on a trend. So basically the trend being buy the dip around 10:30 in the morning and watch the float up every day, basically. Okay, even today. But the problem is this. Institutions know that if they do something multiple days in a row, eventually the small investor hops on board, and then what they'll do is they'll take it in the opposite direction. Okay, so the good example would be potentially today. Big sell-off, all the small investors, which noted the time of day, all the last few days bounces and how it floated up, they're all buying as the markets are bouncing up. They're buy. Why? Because the markets are going to go up the rest of the day. Again, look at any other day. I mean, look at this. I mean, you bought down here, look at where it ended, all the way near the high. Same thing the day before. Yesterday, we had a little bit of a downtick towards the close, but still off the lows. The problem is the institutions, again, these computer programs are going to take your money. If you think you're smarter than the market, if you think it's an easy trade to buy the dip, you're wrong. The markets are smarter. I've learned this the hard way through my early career. You need to understand that, listen, if you were smart enough to notice the trend on the first or second day, sure, you could have played it a few days because the average person won't put two and two together until later on. But the problem is, by the time the small investor catches on, which is, generally a week later, it takes about a week for the small investor to start catching on. What happens? The institutions know it. They start selling into it. The computer programs take it down, and they're going to flush. I would almost put my money that at least we see double bottom here today at some point, as the institutions want to flush out all those buyers that bought on the way up and take their money. This is classic, folks. You'll see this on stocks, individual stocks. You'll see this on markets consistently. Something will happen multiple days in a row, and then after a certain amount of days, it does the opposite. It lures them in. You get the bounce that makes it looks like it to buy the dip, and then what ends up happening? Oops, take their money. This is something that, again, every investor should be aware of. You have to be aware of this, folks. I can't stress that enough. If you think you're smarter than the market, you are not. The markets will always be in control or controlled by the big money, the billion, hundreds of billion-dollar, institutions out there. They're in control. They're trying to take your money. Generally, if you don't know what you're doing, the markets are a great way to transfer wealth from you essentially to the bigger boys. And that's why, honestly, I've always stuck. And I got asked this question in the chat room today. Why don't you buy the dip? Why not? Why not? And I said, listen, because I understand that the markets are rigged like this. Now, once you know the rigging, then you can avoid it. And I don't play this buy the dip nonsense, and that's why is because it's not PPT related. I use price pattern and time PPT. It's methodology that we created here, and it enables us to just consistently trade for profits. We see the setups, we know what they do, we play them. All right, but again, this is a lure. This is basically like you're a fish in the water, and there's that shiny little lure out there, and you're going to try to jump on it. Oops, there's a hook there. You just got taken in. You just got caught. Don't let that happen, folks. Don't let that happen at all. All right. On that note, I encourage you to come take the 7-day free trial here at InTheMoneyStocks.com. We've already had 2 winners in the intraday stock chat today. Beautiful. We had 2 winners yesterday. The profits continue to swell. Research Center is for swing traders. Options alerts, obviously options traders. And the intraday stock chat is for day traders. Come get involved. The profits continue here at InTheMoneyStocks.com. Take care.